Good afternoon and welcome back. Happy New Year 2022. This is Joseph Scarice, your certified private lender. And we are back at Real Estate Niches Podcast. And I'm really excited about where we're going with this. We're going to be producing and providing education, networking, and creating opportunities with like-minded real estate professionals, licensed professionals, certified professionals in their field. We got a great subject today. We have Teddy Lee, who is the founder and CEO of Nophin. He builds products at leading mortgage and on-demand startups as career entrepreneur and technologist. And in his search for financial independence through property investing, Teddy founded Nophin to help landlords access liquidity from their biggest illiquid investment. Nophin lets landlords advance their rental income on demand instead of dipping into their own pockets or tapping into debt and equity options. Modern landlords use Nophin to pay for expenses and growth. Teddy, how are you? How's everything going? Happy New Year. The discussion today is going to be about rental income in advance. What's your thoughts on that before I really dig into some questions and maybe some insight you'd like to give us first?
Hey, Happy New Year. I'm really excited to be here today. I think rental income advance is the product that we offer at Nophin, and I think it's the future. It's much better than traditional financing options, and quite honestly, it's something that I think more landlords should be using in the future.
So, what is rental income advance?
Yeah, so typically when you sign a lease with a tenant, usually have like expected receivables if it's not a month-to-month lease. That means every single month, suppose it's $1,000 a month. That means over the course of the year, if it's the annual lease, you should be getting about $12,000. So rental income advance is basically done either by the tenant or by a third party that essentially allows the landlord to get access to all of that money in one lump sum very early on.
So how does it work?
So what we offer at Nophin is essentially this rental income advance. What we do is pretty simple. Nophin essentially asks landlords to upload all of their leases for their properties that they own. We go through a really quick connect data process. So we use the landlord's operational history as well as property details and comps to determine the payout limit. And then you essentially trade the leases that you want to trade, the number of months that you want to trade for, and you get access, and we wire the money right away. So it's really, really simple.
Is my rent guaranteed when I get in advance?
So it's not guaranteed when you get in advance. However, there are options like Rhino, and there's a couple other groups that do offer rent guarantees as well.
How does Nophin work?
Nophin essentially fronts the money that your tenants would otherwise pay you over the course of the year, and you get that very quickly. You get that today. Critically, Nophin is not a loan. It's also not an equity partner. So we don't apply for liens. We don't apply for titles. We don't apply for any of those. It's purely based on your personal operational history.
So how is Nophin different from a traditional loan?
Well, at a high level, Nophin isn't a loan because it's essentially using your future receivables, your future rental income as collateral. And we're basically using that information as the basis for this. So it actually allows us to we essentially purchase the future rent rather than provide you a loan, essentially.
What happens if the tenant stops paying?
Yeah, good question. I think if a tenant stops paying, ultimately, you essentially just agree to rebate a prorated unearned portion of the lease back to Nophin, or alternatively, you can also swap the receivables onto a different property's receivables that's still performing.
So, how much does it cost to advance your rent?
Yeah, so this is different depending on your specific operational history, your specific like property data, your comps in your area. But for the most part, if a landlord, for example, has like very limited property history, it could be as cheap as like anywhere from 8 cents discount or 10 cents discount on a dollar. So we would essentially advance you anywhere from 90 cents to 92 cents or so. But obviously this varies.
So what are landlords doing with the money they advance?
Typically, landlords have been doing two things. The first thing is they actually use it for more growth. We've seen actually a landlord, what they did was they actually advanced the rent for one of their properties, one of the off-market properties that they purchased, advanced that rent, and then use that money to actually serve as the basis for the down payment of a second property. Since this isn't a loan, since this isn't an equity option, it actually doesn't inhibit your ability to borrow more. So they could still get a mortgage on top of it. It's supplemental financing here. So they were able to leverage their ability to like grow even faster than they would have with traditional options out there. A second place where we've seen a lot of customers use Nophin is via maintenance expenses that exist. Sometimes there's really, really large expenses that you just don't want to really dip into your own pockets to pay for. And you can quickly advance your annual lease and you'll be able to essentially pay for like a boiler or a roof or something pretty expensive out there.
What's the process to use Nophin?
Yeah. So Nophin essentially is very, very quick. We can get you a financing in as little as 24 hours. But essentially, all you do, upload your leases. After you upload your leases, you essentially connect your data. So you connect your bank account via Plaid. You connect your and then we do a bit of research on our end to make sure everything checks out. And then if everything checks out, you sign the agreement and we wire you the money. It's really, really simple.
You apply for a title or lien on the property?
No, we do not. This is one of the benefits of using our product, where we don't use liens. We rely on like different pieces of data in terms of how you've actually operated in the history and how efficient you are as a landlord or how efficient your property manager is.
So how do you determine how much to pay out to the landlord?
Yeah, so this is, we have a couple pieces of data that we essentially pull in. This is from public property records. We make sure that you own the property. We look at comps, like what's the expected rent growth in your area? What's the kind of like net vacancy or net occupancy in your area as well? So different types of metrics of that nature. Your house, if it's like, when was it built, different details that help us understand the stability of the house and whether or not you'll have maintenance expenses. So we pull in a bunch of different pieces of data from public sources and also private sources. And then we also look at your lease data and we essentially determine out of your whole portfolio, what is your payout limit? This usually also factors in your debt obligations as well. So we really try to make sure this is really amount that that is already yours in a sense. It's like the amount that will be yours, but you just have to wait a bit of time to receive.
What are some of the current options landlords are resorting to? I mean, under the circumstances that we're in, we're in trying times with the pandemic, eviction issues, just labor shortages. Some thoughts, some direction.
Yeah. So outside of Nophin, there are options that exist. Like on the debt side, you of course have mortgages, you have hard money lenders, you have private money. I think like for most of those, there's trade-offs depending on your circumstance, and it might be right for you, might not be right for you. With regards to like some of these other options, like mortgages, they can take a really long time. So what that means is, as a property investor, you might end up missing out on your deal. For HELOCs, especially now, it's subject to market dynamics. in 2008, a bunch of people were underwater because their HELOCs were essentially way too much of their the amount that they borrowed. And then so there's different downsides for all of these options. What we offer at Nophin, again, is not equity. It's not debt. We're not offering a loan, which means you can kind of like get access to more cash much faster. And it's at least takes into account like what is considered your free cash flow, like what is considered the amount that you can actually afford.
I really appreciate this niche and type of company. I think, it's unique. I think it fits certain landlords in certain circumstances. How do we arrange a consultation with you or either Weeks Mensa? I think it's worthy of a landlord better understanding the benefits and the pros and cons to working with you in their real estate portfolio.
Absolutely. I think the easiest way to get started is directly on our website, nophin.com. And there should be a big green button that says apply now. And that's basically it. You apply now, you upload your leases, and that gets you started on our process.
Well, I want to thank you for coming on to Real Estate Niches podcast. This is copied, edited, and placed on iTunes, Google Play, and Liptify by Yordell Perkins from Perkitech. So once we have this all cut and edited, we'll be providing a copy back to you so you can send it out to your network. And we hope this brings a whole new level of opportunities to discuss with other landlords that are in restraints or constraints right now due to the circumstances of the pandemic. So I want to thank you for coming on this morning, or this afternoon, actually. And I want you to have a wonderful Sunday, and we'll obviously see you again soon. And I want to thank Weeks for making this introduction and meeting and acquainting ourselves on Clubhouse. So you have a great day, and I thank you for coming on to Real Estate Niches podcast.